PantheonAI presents biggest inflation jump in 6 months, but Fed signals rate cut. Welcome to the PAI Morning Briefing. It is August 12th, 2025, and I'm John, here with my fantastic co-host, Sarah.
Good morning, John, and a big good morning to everyone tuning in. It's great to have you with us. We've got our coffee, and we are ready to dive into what's moving the markets today.
Absolutely. We'll be hitting the big trends, the hot headlines, and what it all means for key sectors and the global economy. So let's get right into it. What are the numbers looking like this morning?
Well, let's take a look. The S&P 500 is trading around 64.27. That's up about 0.5%. And the Dow Jones is looking pretty strong at 44,418, up nearly 0.83%.
Holding strong is right. And the Nasdaq? It's also in the green, sitting at about 21,597. Which is a climb of roughly 0.4%.
Right, so we're seeing this quiet confidence in the traditional markets. But John, the real fireworks seem to be in digital assets. Bitcoin is up, trading around 119,715.
Wow, and what about Ethereum? I heard it was having a big day.
A huge day? It's surging, trading at roughly 4,448. That's a spike of over 5%. It really feels like there's a cautious optimism in stocks, but a real undercurrent of excitement in crypto.
That's a great way to put it. It's not every day you see that kind of positive energy in both equities and digital assets at the same time. It really paints a picture of a market that's advancing, but maybe waiting for something more.
Exactly. So the big question is, what's driving all this? And the conversation, as it so often does, seems to be turning toward inflation and the Federal Reserve.
It always comes back to the Fed, doesn't it? So what's the latest inflation data telling us?
Well, the headlines are buzzing about a key measure of the Consumer Price Index. Core inflation rose by 0.3% in July. Now, that might not sound like a lot, but it's actually the biggest jump we've seen in 6 months.
Oof, that's the kind of number that gets investors' attention. It puts everyone on high alert because, someone always ends up paying the price when inflation creeps up, and it's usually the consumer.
You'd think so. And normally, a number like that would have everyone screaming about rate hikes. But here's where the story gets really nuanced and, frankly, a bit strange. There's chatter that the Fed might not be as hawkish as we feared.
Oh, do tell. Are we talking about a pause?
Even better. We're hearing from a couple of Fed officials who seem surprisingly cool with the idea of a September rate cut temps. Yes, a rate cut, even with that inflation number.
Wait, a rate cut? In this environment? That feels like trying to have your cake and eat it too, while the oven is still on full blast. You're trying to cool things down, but also keep the party going.
It's the ultimate balancing act, isn't it? The Fed has to weigh these inflationary pressures against the need for economic growth, but it seems like investors are really embracing the possibility of that cut. The optimism is almost contagious.
And speaking of optimism, some people are taking it a step further. I saw one headline featuring former Professor Jeremy Siegel where he basically said, "The die is cast for a rate cut." He's not mincing words at all.
Wow, talk about a bold call. Essentially forecasting Fed policy like he's reading tomorrow's newspaper today. I love that kind of confidence, even if it is a bit dramatic.
Right, but of course, not everyone is on that same page. We also heard from Fed official Schmid, who took a much more measured, patient tone.
The voice of caution. What was his take?
He basically said that keeping a modestly restrictive policy is probably the right move for now. He thinks the Fed should be patient. It's like he's saying, let's not slam on the brakes, but let's not stomp on the gas either. Just keep a steady hand on the wheel.
That makes sense. It's a reminder that this isn't just about reacting to 1 month of data. It's about steering the whole economic ship for the long haul. So with all this back and forth, what does it mean for the actual sectors that make up the economy?
Great question. Let's start with tech. The Nasdaq is up, so there's general optimism, but it's always a bit of a wild ride. You've got great earnings and innovation, but also those nagging concerns about regulation and inflation. It's like riding a roller coaster in a theme park that's built entirely on other roller coasters.
That is the perfect analogy. And that balancing act you mentioned earlier really applies to the energy sector too. They're juggling the demands of traditional energy production with this massive, necessary shift toward renewables. It's like a tightrope walk between powering today and innovating for tomorrow.
Exactly. And the finance sector is on its own tightrope. A potential rate cut could be great for them. It encourages borrowing and spending. But at the same time, they have to worry about their profit margins getting squeezed. and regulators watching their every move.
And, of course, none of this happens in a vacuum. A decision made in Washington echoes everywhere. We're seeing global investors perk up, trying to figure out how U.S. policy is going to ripple across Europe and Asia, especially in places where the economic recovery is still a bit fragile.
So as we try to piece this all together, we have rising inflation, but also strong sentiment for a rate cut. We have bold predictions, but also calls for caution from within the Fed itself. It feels like we're trying to solve a Rubik's Cube blindfolded.
It really does. It's challenging, but also fascinating. The big question is, could a rate cut actually spur growth enough to offset inflation, or would it just add more fuel to the fire? It's a delicate, high-stakes debate.
You know, it's funny, sometimes following the market feels just like my morning commute. You think you see a clear path ahead, and then suddenly bumper-to-bumper traffic for no reason. You're just waiting for that miracle green light.
I feel that. Maybe the market is just waiting for its own green light to really surge ahead. So as we wrap up, let's leave our listeners with a few things to think about. How are you personally balancing the risk of inflation with the potential upside of lower rates?
That's the key question. Are you positioning yourself to benefit from a cut, or are you playing it safe? And how are you thinking about your international exposure in all this?
These are definitely not simple questions. To sum up today, we've got indexes inching up, crypto making moves, a hot inflation report, and completely mixed signals from the Fed and market experts. It's a complex picture.
And that's where having a trusted copilot comes in handy. A special shout out to PantheonAI for helping us make sense of this dynamic and challenging landscape.
Absolutely. We hope our chat today gave you some clarity and sparked some ideas for your own strategy. The markets are a mix of calculated risks and thrilling opportunities.
Well said, Sarah. Thanks for joining us today, everyone. We invite you back tomorrow for another deep dive. Until then, stay curious and stay informed.
Have a wonderful day, and remember, learning shouldn't feel like a full-time job. PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.